Back with another weekly watch list video. We've taken 10,000 USD in profit this week. We've got a few disputes with certain firms, which is probably why you've noticed we're a bit kind of quiet on the social front, posting updates and bits and pieces. Until we get those resolved, of course, we are still trading with trusty Think Markets and Think Capital using their Think Trader platform. You're going to see some of that in this video. We're going to summarize, the highs and the lows of last week, what it's like coming back from that kind of break over the Christmas New Year period, and ultimately, what we're looking at going forward for this week, and hopefully markets start to, simmer down a little bit. For those that trade gold, commodities and bits and pieces, you might have noticed as well, volumes and volatility is quite wild. You'll see on the 1 minute chart, the 30-second chart, gold really jumping, 10, 5, 10, 15 points, etc., which is quite abnormal. But again, US 30, US 100, similar approach with that US market open bell. So we're going to summarize last week, what trades we've taken, and a little bit about, how we've taken some profit withdrawn in bits and pieces, but also ultimately what we're looking at going forward this week. So hope you enjoy the video, and we will see you in a short second. So as per the introduction, obviously a lot to kind of report on this week. We obviously missed out last week's watch list. We had those disputes in place. We had a lot of travel, and the markets were pretty wild. So we do apologise for obviously not getting the weekly watch list video out last week. However, we are here and we are looking at everything going forward. Week commencing the 20th of the 1st. So we've basically got US 30, US 100, the same exact pairs that we look for, and you can kind of see why last week was a bit quiet. If things aren't unfolding, we simply won't post updates just based on the next possible opportunity if we don't really believe in it. And we mentioned on the introduction, things are jumping around quite a bit, especially around US market open bell, and again US close. So 2:30 p.m. UK time and around 7 to 8 p.m. UK time as well for that kind of close. Gold has just been absolutely wacky. So gold has been incredibly choppy. I say choppy, it's trending. However, if you do trade these lower time frames, you're certainly going to see big jumps. If you're looking at the ticks here, you'll see 0.5, 5, 10, 15 points sometimes, and it's quite aggressive, quite volatile. And those that are new to commodities and gold trading and bits and pieces, you'll certainly see a bit of a scare on that basis. We've obviously got our zones marked, and gold is one of those that we were sharing. That being said, we're going to run through probably gold first. In fact, that's the pair that we were following, even though we were a bit quiet last week. And once we broke that zone, we were looking for buys around 26.62. Once we had broken this zone, initially we were looking to obviously short it in line with something similar to this play, trading this supply. We've got lots of tests previously, bit of supply on the 4 hour, 8 hour, etc. And then eventually we broke, we bounced, and then retest, and then again we bounced, and then double bottomed, and then we really took off. The next port of call was the that kind of top end major resistance price, so 27.16, 27.17, and again we saw a massive rejection. So we sold off nicely here, as high as trading as high as 25 all the way down to 2700. So again, it doesn't look too significant, but you actually think that's 250 points. We're really kind of seeing some massive moves on gold. You can see here, $11 per ounce, per tronic ounce, in a single day. Typically, we're looking at 50, 60, but we're having swing highs and swing lows within that period. But we're really trending at the moment. So hopefully, we reject this and we start trading between the zones, which is obviously what we like to do. It's how we trade. We use zones we've traded from previously: support, resistance, interim support, interim resistance, and we literally just make sure we can stack some sort of confluence and probability basis alongside attractive risk to reward. So we're risking £1, for example, to gain maybe £2, £2.50, £3, or sometimes in this case, if we're swinging much greater, US stock indices, much greater attraction, or much greater reward potential. Because they're more trending, they range and they trade between zones, but they trend naturally because they're assets. They're not commodity, or they're not currencies. They're assets, right? FX has got more reason to trade between zones because there has to be more macroeconomic drivers to kind of see such change in trend, Brexit, NAFTA, US-China trade talks, things like the war, Russia, Ukraine, you've obviously got Israel, Palestine, these are things that are going to move currencies for that period of, economic turbulence, right? And at the moment, we're starting to see a bit more of a tamer market, which is good for the zone trading consensus, but for those that trade trends, it's maybe starting to lack a little bit more now. That being said, you know, we've got gold, we've got US 100, we are breaking zones. So, you know, if we do look at the likes of the daily time frame, we're still downtrending. You can see evidently here, but it's just a matter of trying to catch something that justifies a good entry. And to be honest with you, you know, we're probably going to struggle for a while now because we've got arguably a zone where we are now. But, you know, it's going to be quite speculative and it's going to be quite... It's almost like, you know, you need to take maybe a couple of losses to get that good entry, which is going to offer that great reward potential. But what you can see if we kind of drag and drop across here, we've clearly got a previous trading zone where we resisted and consolidated, we broke, we retest, we were playing around here, and then again, resistance, and again here, a bit of rejection here, and then support. So arguably where we are now, but there's nothing to say we're not going to pop up slightly higher around here, then stops would cover this previous high. So that's really important to us because we really want to try and cover this region here to ensure that if we do trade above and beyond this trading zone here, then we've got a change in trend, right? And that change in trend might look something like this, right? So we pop higher, stop loss, and then that would be the entry long, and then we could start to take off here, right? And then we would literally look to change what we're doing, and we'd look to enter long and change in trade in line with the trend, the continued trend. So whilst we're selling off in a higher time frame market, this lower time frame, this H4, could be the difference between you know, a flip. So we could now flip, change, and trade in line with bulls, right? So, you know, buyers are taking over, they're taking precedence. The change in trend is justified. Then a higher time frame kind of table flip. You know, we're now trading above this kind of red box, this red zone, after breaching that previous structure here. Then we're coming back down. As things go up, naturally they're going to come back down, a market correction, profit taking, and the like. And then we're going to possibly take off. If we look at US 30, you know, arguably I didn't really want to break this 43,200 price. So that's a bit of a shame. But again, you know, we are still downtrending. I know we've got this kind of break here, but that massive move didn't see a massive correction, did it? So this swing high down to swing low, you know, 38.2, you know, that could see 61.8, maybe around 50 around here. That could be enough, that could be good, that could be all we get. And then if that is all we get, you know, we could possibly start to see selling pressure come back into play here for US 100. So for the time being, I think I am bearish bias still. I would like to see some bigger corrections. I think I'm going to remain as we are there and leave that as it is. The dollar index is obviously climbing higher. We had a potential resistance, which we broke, we pulled back, and then that's arguably a bit of concern. So, you know, as we kind of pushed higher, pulled back, and consolidated, that kind of 109, 170 price was kind of the previous support, I would say, but arguably we've still got 109 here, and that's where we've kind of bottomed out. So again, when we talk about confluence, we've got 109 whole number, we've got, you know, previous support, previous demand, and the like. If we go to the daily time frame, that might kind of coincide a little bit better with what we've got. So here, for example, we rally, we pull back. So arguably, you know, that lower time frame noise kind of comes out in the wash, and we could argue that, you know, this swing low to swing high, that's a natural correction. And if we do a little measure on that, what do we see? I'll take it from this red daily. We've got around 61.8 and we close at around 45 to 50. So again, you know, we're still pointing to the upside. Let's see what happens. Bitcoin, you know, I really didn't want to see that break above. It's kind of, now we're kind of waiting. We might see the next kind of bullish wave. Not really too much to report on that. We were obviously looking for longs around this 190 price, and it still may be very well intact, but we just broke slightly below that. And again, you know, we've got this kind of previous support here at 189. Doesn't tie in with anything else. So 190, obviously, we've got previous 190. We've got that 190 support, psychological price. We've got that area of demand there. If we look at the lower time frame, what do we have? You can see here we wick in and we completely reverse. We had a bit of support initially, but we didn't quite get off the ground. But that could be back on the cards. USD Japanese yen, we've sold off, we've broken this kind of support price of 156, 156 to 300-ish, and now we're looking to retest. So we could see some selling pressure, which doesn't really kind of complement what we've just justified. So, you know, we're looking at the dollar index. If the dollar is looking to take off and be bullish, we should hope that the dollar is outperforming the Japanese yen, which would mean the dollar, or yeah, the dollar yen would obviously, you know, climb higher. That being said, you know, let's see what happens here next week. Let's see what other pairs we've got. We're obviously looking to sell off a little bit here. We've got a bit of an 8-hour trend to the downside. So, you know, that could well be, you know, a big daily sell-off and then a bit of consolidation left to right. That could just be Something that we, consider, whether this is a bit of a huge daily consolidation. I mean, we can't really take that for what it is, because you're talking August, September, October, November, December, January, 6 months. That's too high for us to consider. We're not position traders. We're intraday traders. We often swing FX and commodities, but if we're trading futures, we're certainly intraday. So we've got a little bit. I've spoken about US 30, US 100, gold. They're our primary focus. We that's what we kind of specialize in. That's what we focus on mostly day to day. And then obviously the dollar index, another indice. And then we obviously look at cryptos and bits and pieces, but there's not much supporting any sort of confluence or any sort of play that we're looking for. So we're not really we're kind of moving away from that at the moment. Obviously futures, Nasdaq futures, gold futures, and YM, which is US 30 futures, Dow Jones, so Dow Jones, Nasdaq, gold. We're in a similar boat. These obviously move very similar to futures, the stock indices move very similar to the kind of futures copyright, but they're obviously different pricing and different executions, different exchanges. So, we trade both futures, commodities, CFDs with different platforms, but ultimately we're kind of looking at the same thing, the same trading zones and so on and so forth. So again, hopefully this made sense. We are still kind of neither here nor there with where we want to go. We obviously want stock indices and gold commodities to start selling off. That's our bias, that's our consensus. But as crypto gains, that kind of correlates quite nicely with these stock indices as well. So that throws a spanner in the works. So ultimately, we would like to see rejections, but we just need to wait a little bit longer to see what unfolds. So hopefully you enjoyed this video, and we'll kind of see you on the next one. If you do have any questions, don't forget to check out the description below. Comment, leave a like. We can get back to you. You've got our access to email, socials, etc. So enjoy the video, enjoy your trading week ahead. Hope you all have a profitable week ahead, and we'll update you with everything we've got and made and that we're pushing out this week going forward. So check out the free Telegram group, because that's where you are going to get access.